Cowboy, and it's Algo Factory. Listen, don't wait around and don't try to procrastinate or capitulate. Join Algo Factory and capitulate to actual trading and success. That's going to propel you to some serious life-changing reality right here on AlgoFactory.tech. Cowboy, flash the QR code on the screen. With that being said, Cowboy, let's get into it.
Sure. So I got the QR code on the screen. You can go check us out. We're going to jump right into the content here. But V, your audio to me is a little funky. And I know it's at this point, I'm probably going to kind of, as I usually do, take over, look at charts, blah, blah, blah. I don't know. It might help you to restart your machine or something. It was fine when we were talking before we went live, but now your volume's a little bit choppy. So in fact, everybody over in the private chat, go ahead and let me know what you're thinking of V's audio. Yeah, Ray says V's sound is shaking. I think it's something on your end. Also let me know how my audio is. Obviously, I think somebody would have said that my audio was shaking if it was. So I guess we'll just kind of see how that goes. You might just be having some shaky internet over there. Yeah, shaky internet. It's because of that. It's because of that online dating profile shaky? That you're. Yeah.
Hello.
Shaky.
I'm still shaky.
How do you sound good now?
Okay, good.
Were you on some kind of Bluetooth device or what?
Wired. Yeah, I went from wireless to wired.
Oh, dude. Yeah, you can't go wireless when you're live, dude.
I know. Sometimes I just try to be cool, Doesn't work out.
Yeah. No. Well, you're a parent now, so trying to be cool usually is a death sentence.
It really is. Shocking, isn't it? It's like that commercial from Progressive. You become your parents, Oh,
jeez. Yeah. Yeah,
I get excited off of lawn stuff.
It's like you get excited off of lawn darts. What?
Yeah.
Lawn darts,
basically.
Dude.
Right.
Lawn darts were a 1970s phenomenon. I don't know. All right. Well, there's not much going on in the news today as far as economic data coming out. Now, you don't know what's going to happen in the news itself in the future, but economic data is going to be unpredictable. The market is super, super choppy right now. And we do have some data coming in as to why that might be. We're going to talk about that on Drips Thursday. So if you're watching YouTube and you don't know what that means that if you are an Algo Factory private member, the gorilla, and if you already know who he is, then you know what kind of dank data. He has the dankest data. You deal with billionaires in your in your other businesses, so you're talking to people who hear everything first. So if in fact you want to hear what V is hearing, he can't even share it on the Rogue News channel.
Won't share it on Rogue.
Got to be won't share it on Rogue. You'll share it 2 months later, but not here or not there. But here we get it on, and it's usually 2 or 3 Thursdays a month. We get it on Drip Thursdays, private members only. And I will, because that is pretty awesome. I'm gonna go ahead and throw that QR code up one more time because it's something you guys want to do. So zap that, go to the website, sign up. $50 a month. Price is going to go up. That's the pitch. Let's look at who do we have here? Valley Girl. Thank you always for being here. Valley Girl is one of our faithful. Everybody in here is faithful. Everybody in here right now is here every day. We love it. Good Tuesday morning. We got, let me see here. Mavbet, good morning. What's up? Brad King from Down Under, I believe. And we got Brad King has been just slaying it on the test, dude. And we also have a gentleman, Joe, who I don't want to say his last name necessarily unless he wants me to, but I talked to Joe last night who I was talking to. He's one of our clients. I just don't want to say his last name because I think his screen name is a last name and I don't want to do that. But that guy has smashed through 100 tests as well.
That's what's up. That's how we do it, guys.
Yeah. So, and when I say a test, we're talking about back testing. Okay. So, but by the way, we got Jay Martin in here. Just what has he got? Busting it. Who's pitching? Who's catching? Valentine. Good morning. Thank you all for coming on to YouTube. If you are in the private chat and you happen to be able to access YouTube, please come over. Please talk to us. Thumbs up, like button, smash, all that stuff. All right. So, I guess we could talk a little bit about back testing and what that is. When you are building an algorithm, okay, so the way we build algorithms with Algo Factory is we tend to use, don't have to, but we tend to use a combination of market structure, which we have done plenty of shows on, and we stack indicators. Indicators are all these squiggly lines that you see at the bottom of the screen. Those are all indicators. This is my main algo screen. I don't use all of these necessarily. I just have a lot of these up because what happens is as I'm back testing, I'll sort of have this, some of these indicators I'm not using, but they'll be on the screen. And my theory is that my subconscious is actually looking at these and saying, hey, this might be one to use. And then it just kind of filters it in through, percolates up through the brain, and then I'll find a place for it. But to make it really simple, I will go to our friendly chart just so we can kind of, not look at something that's quite so complicated. And let me find the friendly chart here. All right. That's Rocky. All right, so I did. You can see that I kind of had the euro spiking up and then heading down to this area. So this wasn't a trade I took. This was just a hypothetical. We were talking about using different stops yesterday. So this, what you see, is not a trade that I took. However, I did kind of draw this yesterday, and it moved quicker than I thought it would. So it did what I said that it would probably do. But this was just something that I wasn't even really like mapping this trade out. I was just doing an example. But it's just, even off the top of my head, I draw really good stuff that kind of works out because that's just what I do. So I'm going to bring up some indicators here. Looks like we don't have any yet. And we're going to first flash a couple. Let's just make it really simple. We'll use maybe like MACD, which is one that people use a lot. So to find indicators, you go to this top box here, indicators, metrics, and strategies. And you can type in which indicator you like. We'll say MACD, which is otherwise known as moving average convergence divergence. And in this particular lesson, we're going to assume that you know how indicators work because we only have so much time. Okay, I know this is a beginner class, but it's really easy to go online and say, how does MACD work? MACD indicator, go to YouTube, right? And so, you can just do that to learn without having to go through an entire class here. There's also stochastic, and I'm using super common indicators for this example. Stochastic RSI, right? These are two indicators, right? So
and that is the opposite of the sarcastic RSI.
The stochastic versus the sarcastic. Yeah, this is the serious one. The sarcastic RSI makes mistakes.
Avoid it like the plague.
Yeah, or just do the opposite. It's the opposite indicator, right?
Do the opposite. The sarcastic RSI was created by Jim Cramer. That's what he uses to buy shares. So you want to avoid it. You want to do the exact inverse of the sarcastic RSI.
Jim Cramer.
That's such a dork.
Yeah, you know what though? To be fair, like his reverse ETF isn't going that well. Last I checked.
Oh, okay.
He's lauded as this like, he's on MSNBC and whatever, and so he's like he'll say, oh, I think this will do well, and then people oftentimes lose because they follow him. But ultimately, if you do follow what he says, it's like maybe you're right half the time. It's not 100% losses. But the problem is what I have a theory about Jim Cramer, and I'll do it before we get into back testing. My theory about Jim Cramer is that he is right enough times to get people to follow him. And then like when the muckety mucks really want some exit liquidity or entry liquidity, they will have him make a recommendation. Yep. And then that'll take care of them. So, look, the last thing you want to do, and I know this is going to sound strange coming from guys who, talk about trading, but we don't make recommendations. We don't give investment advice. So understand that. We just talk about the nuts and bolts of trading here. So if you want to go ahead and invest, you got to talk to your licensed investment advisor. Okay. What we do is we talk nuts and bolts. So the point here is that all these gurus, I mean, unless you look at their track record and it's really good, you don't want to just follow gurus. It's not a good idea. This is the whole idea behind Algo Factory. Look, there's signal rooms out there, but I've been a part of many of them. They're right maybe half the time. I mean, maybe. So, there's a couple that are better than that. You know what I mean? You have a few that are really good, and then they're like real streaky. And then what happens is because they're streaky, they might not do well for a week, and then you lose faith in them. And look, here's the thing about it. With Algo Factory, you're building your own system. So you're going to understand, you're going to have the psychological advantage of understanding the probability of your own success. And that's why, in my opinion, is what makes a successful trader. I've been a part of a lot of signal rooms from the back end and the front end as a customer and as an analyst. And I can tell you right now, most people give their money to a signal room and then they jump out after a while because they can't handle the stress, because they're not the ones making the analysis. They're not the ones making the trading decisions. So most people are short-lived in a signal room, even in a successful room. Algo Factory helps you build your own plan, so you have an understanding of the success, and then you have a confidence in your trades. Okay, so all of that, we're going to take a look at back testing, and I'm just going to make a simple BS algo here. It's not necessarily going to be a good one. I think I've done this before, so we're not necessarily giving anything away for free, but look, the way MACD can work, it works in a few different ways, right? So MACD is gonna, I'm gonna keep the standard default settings, right? I use different settings on my MACD, and those of you in Algo Factory know what they are. Okay, so but here we're gonna go ahead, and I'm gonna actually just let you know that when we build an algo, we stack indicators. Okay. So we're going to stack MACD and stochastic RSI, and we're going to analyze both of these to kind of see how they work. And then we're going to see if we can kind of make a strategy to where we can predict price movements and win trades. And then we will go back and do some back tests. That's what we're going to do. So MACD, one way that it works is that when when this line, okay, these two lines, the squiggly one's called the MACD line. It's a moving average that's faster, for those of you who understand what that means. And you don't need to know what that means right now, but if you can just visualize what I'm talking about without the math behind it, you'll get where we're going with this. The slower one, the smoother one, is orange. That is the signal line. Okay. So one way to do this is that when the signal line goes below this zero line, okay, so these green and red, it's called a histogram. When the histogram, when the signal line goes below the histogram zero line. So if you look to the right, you see it where it says zeros. That's because as I move the cursor up and down, it goes from positive to negative. So when this signal line goes below the zero line, price tends to be negative, like the direction of price tends to be bearish. When the signal line goes above the zero line, price action tends to be bullish. So now you're going to have these weird areas right here where it kind of crosses and there's not a lot going on, right? That's where you can lose trades, and you're always going to lose trades. And this is a very simple algorithm. We're not going to try to develop any kind of filters to avoid that problem. We're just going to strictly stay with this above below because we don't have time for the rest of it. So there are ways that you can use more indicators or other types of analysis to actually filter that out, to filter out those bad trades. We're not going to do that here. I'm just going to mark where the crosses are, and we're going to do some comparisons. Okay, so I'm just going to make these lines, and they'll go throughout the whole chart, right? Okay, and a great area to look at is from here to here because it's below this whole time, right? Same with right here. The signal line goes below the zero line this whole time. So in this whole time, price is probably going to be bearish. Okay. So now I'm going to go ahead and close that out. And then I'm going to identify, based on this line, what's bearish and bullish, right? So here you can see where after this line, the signal line goes below. Let's go ahead and label it. Yeah, we'll label it up here. We'll say bearish. That means price is probably going down. And the same is going to be over here. Let's see here. And there's a blip right here. It's going to be like bearish right there, but you don't know it until it happens. So, we're looking at things as they unfold, right? Looking at things in real time. So we're going to do that here. Little bear, because you don't know it's going to turn back up until it happens. We're looking at the past, right? And for those of you who have back tested, you know what I mean by this. Okay, we'll do that. Okay, and then we'll do right now everything is bearish. Okay, we'll make that bigger since it'll fit easier to see. And everywhere else is bullish. So we'll do bullish. Okay, in this area. Remember, this is going to be quick and dirty. Bull. Bull. Okay, so what we're doing is we're using the MACD crosses to just identify some areas where price is going to be generally bearish or bullish by definition of the signal line going above the zero line, okay? And this is a beginner class, so I'm being a little painstaking about the explanation. So in this area that's bearish, now what we're going to do is we're going to look at a stochastic RSI. I'm going to blow it up. We're going to look only at the stochastic RSI, okay? Now where price flips over like this, and remember, I'm using the standard settings here. I have my own settings. People in Algo Factory know what they are, but I'm going to code teal where price crosses each time. Okay. So let's code it teal. And we'll code each cross up or down where the red line crosses the blue. And it's a similar thing. These are, I'm not sure that this is a moving average per se, but it may function kind of like one. And this is a nasty little guy right here. This is a double flip. We'll have to kind of deal with that as we go. And that's the same kind of situation where you get these sort of readings that are a little messy in that area way up high. And there's a way to treat that, but we're not going to get too far into detail on that right now. Okay, we're just going to get real simple on this. Because I want to construct a backtest. I'm not trying to construct a successful algorithm. I just want you guys and gals all to see what a backtest looks like, okay? And then what I would do is I would find a way to filter out the junk, right? That's what I would do. Filter out the junk. So this is very simplistic. This is going to be, I'm going to code this a different color because it's a double flip right there. It's both MACD and stochastic. Okay, so let's delete that one. Okay, let's keep going. So I'm just going back through time and mapping out all these different kind of areas, right? All right, so you notice there's a lot of stochastic flips, but we're only going to pay attention to the ones that flip in the direction that MACD is dealing with, right? So, for example, in a bull area, well, where do we start? We start in a bearish area. So I'm going to make these a little thicker to make this easier to kind of see. Okay, dash line and really thick. Okay. And then this same thing here, dash line and super thick. Okay, so in between these thicker dash lines, we have bearish price action, right? We got the big bear that I put right here. And every single one of these flips, we're going to filter out the flips where it went long. For example, I actually didn't code one of these, but this is a short flip. That's a short flip. That's a long flip I didn't code. That's a short flip. That's a short flip. I'm going to filter out this long flip where the stochastic has flipped to where price wants to go up, for example. So where this flip happens right here, where stochastic blue flips above the orange, that's a bullish flip in stochastic, and we want nothing to do with that in a bearish situation, right? So, and we know this whole area here is all bearish. So like this bullish flip, we don't want anything to do with. This is a bullish flip we'll cut out. So now we've narrowed down the field. Oops, let me do this. So we'll only right now pay attention between these two dotted lines. So what we've done is we've gone through the past, okay? And we're going to back test, and the best way to do it, well, I'll show you at the end of this an even better way to kind of make this easier. But in this back test, each one of these blue flips is potentially a trade, okay? So let's just say that you want to go short And if you watched the show yesterday, then you'll see how stop losses are created and how this long short box works. Okay, so we'll stretch this out a little bit and this is a short cross on the MACD in a bearish situation, so we will go short. And we're just going to pretend we have a good stop loss, right? Like, we're not going to go deep into that. We're not going to spend a lot of time on it, but that's a winning trade. Okay, definitely. This one here looks like a winner, right? Now this back testing says, man, this is really easy. I could just do this and win. Well, maybe. I mean, I think that because of my knowledge of things, this is going to look easier than it really is. But in the reality, it's not that much harder than what I'm doing. Really, it's not. So that's 3 successful trades already, right? So we got a short here, and look, you could test and get 6 successful trades in a row, right, on your testing, or you could get maybe 6 out of 8 or 6 out of 7, and man, this algo is dank, man, it's gonna do great, and then you find out later, as you're trading in reality, that it's not the case. Right? So you got to be real careful with backtesting, but I'm just showing you how backtesting is done. So as I'm pulling these little trades out, right, there's going to be some rules that you have to apply that I'm not even talking about here. Understand that there's a good chance that you're not going to win as many of these, as you could. In fact, right now you've got 3 winners, but then you notice these all start to look like losers, So you're only about a 50% win rate here, but if you look at the size of these trades, if you're advanced enough to understand how these long short boxes work, you'll notice that the actual the wins are much bigger than the losses. So even winning half of these, you got 3 winners, 1 2 3 losers, probably 4 losers, maybe 3.5 losers, so maybe even 4 losers. But these winners potentially are 3-to-1 ratio. So you're losing $100 when you lose, but you're winning $300 when you win, and that's profitability, right? So going through this like that, that's a back test. You just watched a little tiny, very simple, probably not successful back test, but it looks good. That's how it's done. All right. So I wanted to just kind of run through that really quick for, those who are interested in Algo Factory. This is the kind of testing that we do. And in this case, we could, tally up the numbers. We can say, just real simple here. You can tally up the numbers, just see what that looks like. So we'll say, let me see, test 1, win 300, test 2, win 280, test 3, win 320, test 4, lose 100, love 100, lose 100. And we're going to say that for 4, 5, 6, and 7. We'll just say those are all losers because this isn't a really good back test because, it wasn't meant to be. And yet it's still profitable because you have won 903 trades and you lost 404 trades, because what you're doing, for those of you who have gone through, you can go back through our clips, there's entire discussions around in our clipped version of our YouTube talking about risk to reward ratio and why I'm winning 300 on the winners and losing 100 on the losers. But technically this is profitable. In this case, given that the trades went like this, given that, I was able to have that good risk reward ratio, and that's a big given because this is just a sloppy little back test thrown together that really doesn't have a lot of metrics, but that you've won 500. You've lost more than half your trades, but you made $400 or $500. So, take it for what it's worth. I mean, this is a plausible back test. I know that I could make this work by using some other metrics. I could use filters to filter out the bad trades. One trick here would be only to stick with the MACD while the, I'm going to show you this real quick here. Only stick with the MACD while the histogram is red, because once it pops green, you notice you start losing trades. So if I were to, let me just do a quick coding here. This red, I'm going to code this one red as a loser. Red as a loser. Red as a loser. And we're gonna zoom in after I do this. So I know that the screen looks messy right now, but I'm just coding the losers right now so that once we zoom in, will be able to identify them. Okay, so I'm going to zoom into MACD and demonstrate to you a very simple filter, which makes this algo a lot more feasible, even in this sloppy little BS backtest. Look at where the losers are, all the red. Remember, all these are short trades, right? Your signal line is below the histogram 0. So when the histogram, even though the signal line is way below here, you'll notice that the histogram is green. In other words, the MACD is crossed above the signal line. But the easy way to look at it, it doesn't matter which way you do. When you notice that this histogram is green and or, well, it's going to be an and, the MACD is above signal, you notice those are all loser trades. So when the MACD crosses below, I'm only taking bearish trades. And when it's below and histogram is red, and which is the same thing by definition as the MACD line being below the signal, those are all winner trades. So that's actually a super feasible, extremely simple algorithm that probably works. So that was a quick back test. That was a quick algo build for everybody to see. And that's all we got time for. I hope y'all enjoyed it. Gorilla, can you give us a send off so we can go to private?
Absolutely. Listen, guys, don't sit around and wait or capitulate. Here's the deal. Join the room that gets you the results. The one and only algofactory.tech. Learn to trade, learn to build your algorithms. And with that being said, Cowboy, let's get into it in the private lab.